Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 13th of February. And I'm starting off with Bacanora Minerals, which has been a favorite of mine ever since it came to market. Obviously, you can see that so far the best days were actually in the summer. And since then, we've had essentially a triple test of support towards and just below 40 pence. The last higher low in February was the start of what looks to be a more constructive phase for the shares. We've broken back above the 50-day moving average now at 46 pence, and the view now really is that while there's no end-of-day close back below this feature, we should finally get back in terms of trying to test this 70 to 80 pence resistance area, which has been in place in September. That's also the top of a rising October price channel, heading up to 77 pence as well. Cautious on the shares, maybe wait for any dips towards 50 pence in order to improve the risk reward in terms of going long here, or you'd wait actually for an end of day close back above the January resistance at 56 pence as well. But it does look as though enough work has been done with this higher February support and triple bottom towards 40 pence to finally turn Bacanora around. Next up is a stock which was one of the highlights of the autumn and the big flurry to the upside towards 25 pence in November. Since then, we've had a sort of rather obvious or necessary consolidation. The big plus here in terms of this consolidation is the way that even though we pulled back quite sharply, we haven't needed to test the 200-day moving average at 3.58 pence. That's normally a positive sign in terms of stocks and markets when they're strong enough not to need to refer back to the 200-day line, which is the key trend sort of feature in technical analysis. The view at the moment is that hopefully support will come in at or above the October support line from the end of last year towards 5.5 pence. If you're already long, that would be the sort of stop loss area. Otherwise, you wait for an end of day close back above the 50-day moving average now at 7.94 pence, just to give us or to give you the confidence that the new leg to the upside will actually have legs. The target in terms of any break above the 50-day line is currently up towards 15 pence, which would be the top of the October price channel, and maybe that could be hit within 4 to 6 weeks of the 50-day line being broken. Finally, we're looking at a stock which seems to be back in favor in terms of the bull argument, and that comes in the form of Kibo mining. Here we've had consolidation also after the spike we saw in the autumn, hitting 12 pence, sort of double top above there. Situation now, it looks as though we've got this mildly falling support line here from December, double bounce off that. We sort of failed at the 50-day moving average initially earlier in February, but double bounce off that December support line, and also double bounce off this RSI support line from last month, which could be the key near-term momentum trigger. Support well above the 200-day moving average 3.13 as well, which is encouraging. Worst case scenario, probably that we would sort of spend another month or two just hanging around between 4 and 6 pence in the consolidation of the December spike. Otherwise, probably is now as little as an end of day close back above the 20-day moving average at 6.34 pence should deliver a new leg to the upside for Kibo mining. That's it from me. More updates at masterinvestor.co.uk.